Joining me now for a closer look at what's playing itself out in that market scene is Antonio Santore from Cartesian Capital. Antonio, thank you for your time and a good afternoon to you.
Good afternoon.
Great, thank you so much for starting the week off for us, Antonio. So far, the local bourse, it looks like markets are upbeat. Keen to get your thoughts on what might be driving this optimism that we're seeing.
Yeah, well, the big story this morning, I think, is the yen. So the yen has reached the high of 160 against the dollar in intraday trading, its weakest trading level in 34 years on the back of speculation. But Japan's top currency diplomat Masato Kanda declined to comment when asked if authorities had intervened. Best quote of the day was from a Singaporean banker who said the sudden sharp drop in the dollar yen passes the duck test. If it looks like a duck, swims like a duck, then it probably is a duck. It looks and smells like intervention. The yen volatility started on Friday when traders were disappointed that the Bank of Japan kept policy rates unchanged and gave little indication of reducing the Japanese government bond purchases, which would have put a floor on the yen value. And then the other thing I think markets are digesting is the Fed meeting that's coming up later this week.
Let's talk about that Fed meeting. No surprises expected there. I think most people are just anticipating to hear where the Fed is post some of the data that we got last week.
Yeah, so the Fed market is clearly pricing in that they'll hold. There's a 97% probability if you look at the Fed funds futures. And the first cut that the market is pricing in is in September, which is a 60.6% probability of at least the 25 basis point cut. So data has been coming in, labor market data has been coming in strong, inflation data has been sticky. So we're definitely expecting them to hold. GDP data did come out lower than expected, but first quarter GDP does tend to do that. So it's not necessarily a trend, and we'll wait and see from here.
Last week, we heard the word stagflation for the U.S. economy flying around. Antonio, keen to get your thoughts here. Do you think this is a possibility, considering the context you've given us that often a Q1 GDP does come in a little bit lower?
I don't think it's a trend. So I think what we saw in the first quarter won't repeat for quarters to come. The probability of a recession, I think a lot of market participants are not pricing that in. The consumer is still strong, as we could see with the labor market data, the jobs data. So I don't think we'll see a slow growth. I think it will improve.
I must also ask you if you are anticipating anything special coming out of China PMI data. We know this has been a bit of an uneven story, Antonio, but where we see green shoots, we take them. The PMI data, that's been rather confusing to see a consistent trend coming out of China.
Yeah, it is volatile, but it's important. It's important for us as a commodity currency. You know, our exporters rely a lot on China, so we are looking for green shoots out of there. Yeah.
And then also keen to maybe look at some company news coming out this week, a rather thin one, I think. But let's talk about BHP and Anglo's. I'm just keen to get your thoughts there. Could BHP sweeten that deal? Antonio, do we know what Anglo's wants to see there, in order for them to feel like BHP has put something worth entertaining on the table?
So Anglo shares gained as much as 4% on the back of those reports that they're making. That BHP is considering making an improved proposal after its $39 billion initial offer that was rejected by Anglo. And analysts are saying that BHP certainly has the resources to do so, but the fear from shareholders is that BHP may overpay. I can't imagine BHP executives having started this bid process, not expecting to up their bid. But the question is, how far will they go before it becomes value destructive? And I think they will go further. Otherwise, the market will think it was a frivolous move by BHP. And Anglo American hosts the AGM in London on Tuesday, and undoubtedly the board and management will be questioned on the merits of the offer and the capacity to elicit an improved bid.
Very interesting times indeed. Bringing it back home, ROBIC and Astral both out with a very, thin trading updates there. Astral, I think we'll start with that one. 445% would sound great if the base was not so low. Isn't that the case, Antonio?
Yeah, as you said, I think it's coming off a very low base. They came out with devastating results last year after the bird flu crisis, but production, I think, has now normalized. You know, they've mentioned earlier this year that no chicken shortages have been experienced or expected in the local supply chain, and that's thanks to a number of contingency plans that they implemented. One of those, for example, was the import of broiler hatching eggs. And we've also seen fewer hours of load shedding hours in the last 6 months. And in fact, this month, we haven't seen any load shedding at all, which is nice. And that should support their second half results as well. And the market is very pleased with the update. The share price is up more than 9% already today.
And then let's talk about ROBIC, one of the few construction engineering companies still, edging out some sort of growth. In fact, they've revised their headline earnings guidance higher. That's something I'm sure investors are keen to see.
Yeah, so they say HEPS will rise between 15% and 25%. And I think that's on the back of a surge in tender activity late last year from quite a diverse client base in sectors like mining, construction, roads, for example, which has allowed them to maintain a strong order book. And I think that's very positive given the challenging economic environment that we do find ourselves in.
Keeping it at home, we do see some strengthening of the rand, always welcomed here. Keen to get your thoughts here on this currency here. Is it rand strength? Is it more dollar weakness? And like we've spoken about monetary policy being in the spotlight this week, what are you anticipating to see with our currency?
So I think the rand, we've got local structural issues which is impacting the rand. Globally, Fed rate cuts have been pushed out, so that's going to give the dollar strength, and I think that is the main driver at the moment. So it's two, but with the Fed pushing out rate cuts, I think that's putting pressure on the rand.
Well, that's it, Antonio. Keen to get your stock pick for today. Which counter are you loving?
Today I'm choosing Ferrari. Ferrari's roots trace back to 1939 under the racing division of Alfa Romeo. The company is synonymous with unmatched luxury and heritage. Ferrari plays the supply-demand curve by capping the number of cars it produces every year, which leads to high margins and strong pricing power. Ferrari's careful supply management and loyal customer base also insulates it from broader industry fluctuations. So Ferrari owners are carefully selected based on their financial and social standing, and the company insists that owners are not allowed to use their car in social media posts, which is quite interesting. So no influencers allowed.
Wow.
And whilst the stock is already up 27% this year, we still think this is a great business with strong moats at a decent price.
Brilliant. Thank you so much for joining us this afternoon, Antonio. It's been a pleasure. That was your midday markets update with Antonio Santore from Cartesian Capital.